Hi, welcome to EQSIS Financial Services, and we always appreciate your interest in learning stock trading and analysis. Okay, in next few minutes, we're gonna discuss about the pretty simple and easy way of understanding the price movements using algorithmical indicators. But do remember, this is just an indicator. This is not a decision makers. Uh, this can be used as a supporting tool to confirm the trend which you yourself identified using the Dow theory, price patterns, and candlesticks. Okay, but however, the indicators which we're gonna cover are widely followed by the people. Okay, so this requires seriously requires the understanding of demand and supply. But even without understanding of demand and supply, you can actually understand this. But you cannot apply this concept in real life without understanding demand and supply. So if you, for a learning purpose, straight away you can look at this video and you can understand some basic aspect of the price movements. But if you really wanted to practice it, you should understand the demand and supply. We would strongly recommend you people to learn right from basics of markets to the trading to the analysis. Check out all the videos which we have uploaded with respect to this edition, this series of videos. Then you can probably come to this. This is probably at the last stage to learn analysis, but not necessarily this is an advanced concept, but this probably the supporting factor. Okay, and we always recommend people to trade only with proper knowledge and follow strict discipline to ensure that you make money out of trading. Okay, technical indicators. As I said, indicators, it is not a decision maker, because a lot of people think the moment you get the bullish sign through an indicator, they think they don't think anything about it. They just simply go and buy the stock. They don't apply their brains. Okay, the indicators are made to reduce human job, but not necessarily to do all the human job. So we again recommend people to follow the price patterns, all these things. Use this to a supporting tool. And it is ready-made analysis. It means if you go to a doctor and asking for a diagnosis, sometimes he himself do self-diagnosis and he would recommend something. If you go to a different set of doctor, no, he may not do a self-diagnosis. He just ask you to take the ECG and he will read reports and he can give you the solution for it. So both are doctors, but one person doing a self-diagnosis, studying the patient inner and down, he is coming out his solution. The other one is actually reading reports, but he should have the ability to read report at least. Are you getting this? But both have practiced in a different way. This technical indicators is like reading reports. It means you don't really need to study the price and volume. That will be studied by the indicator, but you have to study the indicator to take a call. Okay, but it's more like ready-made analysis, very easy to take a call. And do remember, no algorithm in this world works across the market. It is true. In fact, I myself experienced it. It is the statement given by most of the people. No algorithm exists in the world which can make consistently every week, every month, across the year. The algorithm generally make money because of inequalities in trading, but as far as the directional indicators are concerned, some indicators works during a trending period, some works in non-trending period, some may not work in trending. So that you have to really understand which are the trending indicators, which are non-trending indicators. We're gonna use two indicators to study things better. One is moving average, the other one is relative strength index. Okay, first we get into the moving average. It is an interesting concept. First, open the price chart. Okay, say look at this. This is the price chart. The prices are moving up and down. Lot of whipsaws ups and down. If you apply moving average, I generally use 21-day because it shows a 1 month trend. Okay, number one, it reduces the whipsaws. It gives you a smoothing effect, and it is very easy by looking into the blue color ways, whether prices are going up and down, because the black color price charts is actually confusing us. The blue color is very smoothing. That's first activity. Number two, the trend is positive as long as the price, the current market price is above the moving average, which is above the bullish line, and the trend is negative if the prices is actually below the average point. As long as the prices are trading below the average, the below average we call it as a bearish, and the above average we call it as a bullish. This is one way of looking at the moving average. But do remember, the moving average works in some time and it may not work in some period of time. Look at this, during sideways, the moving average really test your patience. It's very difficult to stay with moving average. Sometimes people move out of moving average just because it is a sideways. Sometimes people disqualify moving average because they have experienced a lot of sideways movements, because it was pathetic when it comes to the sideways. But it is the its performance are exceptional when it comes to trending. But the difficult task is identifying whether the stock is trending or sideways. It's a big question mark. So now if you look at the different way of using moving average, look at this. Moving average works like a magnet. How? Assume the blue color line is a magnet. Okay. If anything goes out of this, it get attracted towards the blue color. It means it will attract the prices. And if it comes to the equilibrium, nothing in the world goes in the equilibrium for long term. It means it goes out of the equilibrium. It means it will ripple. So it acts both the sides. It knows how to attract and it knows how to repel it. So probably you can use a different way to make money out of it. But we've just shared the characteristics of moving average. Not just a moving average alone. Equilibrium, the concept of equilibrium shares the characteristics of the magnet. So these are the various ways by which we can actually using the moving average. Okay. Now we look at the next interesting concept called relative strength index. Do remember one thing, when it comes to moving average, it may not work in the sideways. But relative strength index works exceptionally well when it comes to the sideways market. So this is a non-trending indicator. Okay, look at this. First I have to open the price chart. It is like a lot of ups and down. If I apply the relative strength index, this will mark the reading at the lower scale, and you could find 70 mark and 30 mark. Okay, and what you have to do is identify the area here. As the price goes above the 70 mark, that shows lot of people buying the stock. It indicates strength only. If a price goes above 70, it does not mean there is a weakness. It indicates lot of strength. But the moment price comes down from 70 mark to the lower level, this is a level that shows after a significant buying, now there is not moving up. It's because of overbought. Now this shows the characteristics, the second point. This shows the characteristics. This area shares the characteristics of overbought. I'm tired of buying. Probably you can expect the temporary weakness to happen. So it means when to buy, sell the stock. This is a place to sell the stock. Corresponding to this particular day, if it is happening, you can sell the stock. The same way, anything goes below 30, it shows a lot of weakness, a lot of selling is happening. So this is a price, you expect the price to go further lower. But what happens, instead of moving down, this started recovering from the bottom and it managed to cross above the 30 mark. This is a place, it shows a lot of people already sold. Now they don't have anything to sell. Now some buying is happening. Some temporary movement on the upside is expected here. That shows the stock is already made a bottom. It may go up slightly. Are you getting? This is an area where you expect. So go and buy the stock here, not here. Don't sell the stock here. And do not sell the stock here. You can sell the stock here, because this is where it become a overbought. And this is where it become a oversold. It means the RSI and moving average works in a different times. Moving average works interestingly on the trending time. This works interestingly on the non-trending times. Okay, so a lot of people, you try applying those indicators in actual charts, you find the difference in how to use it. It is very easy to apply and get it done, but to optimize your trade, you should have the basic understanding of demand and supply. Okay, so what next now? Probably it's time to start practicing the concept whatever we have discussed so far. So we have practice instruction videos. You can check out those and you can start practicing things in actual markets. And we have a platform where you can actually start discussing with us and start posting your views, and we can also comment about it, and we have a lot of people practicing it. So that will help you to be a knowledgeable trader, professional trader. Then you can start trading in actual markets. Okay. We hope these videos are useful to you. We want you people to share these videos in your uh, portal. That would help us to reach more people. And if you have any viewpoints which you would like to add, you can actually add your viewpoints in the below comment box. Thank you. Happy trading.